Ripple just did something this week that almost nobody is talking about. And if you hold XRP, this single number should completely change how you think about this coin. Wallets holding 1 million XRP or more now control 74.1% of the entire circulating supply. Read that again. Nearly 3/4 of every single XRP coin in existence is sitting in the hands of big holders. And over the last 6 months alone, these wallets have scooped up an additional 1.53 billion coins. This is not retail traders buying dips on Robinhood. This is deep-pocketed accumulation happening quietly while the price chart looks like a disaster. And here's why this number actually matters more than people realize. When that much supply gets locked up in a small number of hands, the circulating float available for everyday trading shrinks dramatically. That creates what analysts call a structural supply shock. It means price moves in either direction become far more amplified than usual because there simply isn't as much free-floating XRP left to absorb buying or selling pressure. If sentiment flips bullish even slightly, there may not be enough available supply to satisfy demand at current prices, and that's exactly the kind of setup that has preceded violent upside moves in this market before. Now let's talk about something happening on the actual technology side that could reshape what XRP is used for entirely. Ripple has been quietly pushing forward two new technical standards on the XRP Ledger called XLS65 and XLS66. In plain English, this is a full institutional lending protocol being built directly into the ledger itself. Picture this. A payment provider is holding RLUSD reserves and needs short-term liquidity while waiting for an international settlement to clear. Instead of selling assets or going through an expensive bank credit line, they can now borrow directly on-chain through this new lending system. Market makers can finance their trading inventory without liquidating long-term positions. Treasury departments can put idle digital assets to work in structured lending facilities instead of letting them sit dead. What makes this different from every sketchy DeFi lending platform you've seen collapse over the years is the risk structure. Ripple built in something called first loss capital, meaning pool administrators absorb the initial losses before senior liquidity providers ever get touched. That's a page straight out of traditional Wall Street credit markets, not typical crypto DeFi. Ripple is essentially arguing that by standardizing lending behavior at the protocol level, rather than letting governance parameters shift constantly like most DeFi platforms do, institutions get the kind of certainty and predictability they need before they're willing to deploy serious capital. This is the exact kind of infrastructure that could pull major banks and asset managers into using the XRP Ledger for things that have nothing to do with simple payments. But before you get too excited, there's a supply side story every single month that you need to understand because it directly affects XRP's price whether you like it or not. Ripple just executed its scheduled monthly escrow unlock, releasing a full 1 billion XRP in 3 separate transactions of 200 million, 300 million, and 500 million coins. At current prices, that's over $1 billion worth of XRP unlocking in a single day. Now here's the good news. Historically, Ripple relocks the majority of these tokens right back into a new escrow contract, typically only allowing 200 to 300 million XRP to actually enter circulation each month. The market has absorbed this routine release for years without lasting damage. But it's still worth knowing because every single month, like clockwork, there's a fresh wave of potential selling pressure that traders need to watch. Now here's where things get genuinely interesting, and where I want to bring up something most channels are completely ignoring. Ripple's own stablecoin, RLUSD, just went live on Gate, marking its third major exchange listing this year after already launching on Binance and OKX. This happened just 18 months after RLUSD's original launch, and it tells you Ripple is moving fast and deliberately. RLUSD operates under a New York trust charter with full dollar backing, specifically designed to appeal to regulated institutions trying to navigate both US and EU compliance requirements. When OKX added over 280 new trading pairs and allowed RLUSD to be used as collateral, that was a signal the market perception around this stablecoin is shifting from side project to serious financial infrastructure. Here's the twist though, and I think this is the part you actually need to hear, because it's the uncomfortable truth nobody wants to say out loud. RLUSD's growth might actually be a double-edged sword for XRP itself. Some analysts are genuinely worried that RLUSD could end up cannibalizing XRP's core value proposition. Think about it this way. If banks and payment providers can settle cross-border transactions using RLUSD, a stable dollar-pegged asset, why would they need to route that value through XRP at all? The entire long-term investment thesis for XRP has always rested on the idea that Ripple's payment network needs XRP as a bridge asset. But if RLUSD becomes the preferred rail instead, XRP could get bypassed entirely, even while Ripple's overall business keeps growing. This exact tension is why Bitwise, a serious crypto asset management firm, built a formal valuation model trying to answer this question, and their answer might shock you. Their 2030 price range for XRP spans from as low as 13 cents on the bearish end, all the way up to over $29 on the bullish end. That is an enormous spread, and it exists specifically because nobody can say for certain whether XRP itself captures Ripple's settlement volume, or whether that value simply flows through RLUSD instead, while XRP gets left behind as just another trading token. So where does all of this leave you as a holder right now? On one hand, you've got whales aggressively accumulating, exchange withdrawals climbing, and Ripple building genuinely sophisticated institutional lending infrastructure directly into the ledger. On the other hand, you've got a stablecoin that Ripple itself created, potentially eating into XRP's own long-term utility case, plus a routine monthly unlock that keeps adding fresh supply into circulation no matter what the charts are doing. The real question every single XRP holder needs to be asking right now isn't just where the price goes next week. It's whether XRP the token actually ends up capturing the value of everything Ripple is building, or whether Ripple's own stablecoin quietly becomes the real winner while XRP just rides along for the volatility. That answer is still being written in real time. In the coming months, especially as this lending protocol goes live and RLUSD keeps expanding, are going to tell us a lot more than any short-term price chart ever could.